Today we have several stories that are important to Tesla's Robotaxi event and the stock. First, we have Cathie Wood from ARK Invest saying that the Robotaxi event delay is actually a positive sign. She said this days before Elon actually confirmed that the reason the Robotaxi event was delayed was because it's going to be a new design for the front and they wanted to show off a few more things. We also have Elon Musk confirming that version 12.5 of full self-driving is now being tested and explaining why the better FSD gets, the longer it takes to find interventions. Third, we have another institutional analyst, Deepwater's Doug Clinton, saying nothing is official until we hear from Tesla about this rumor of the 2-month delay. We've not heard it yet from Elon exactly when the date will be, but he did confirm that there's a reason why. And fourth, we have video to show how Baidu self-driving Apollo Go uses teleoperators in a giant room to manually drive their cars without the passengers knowing. And finally, yet another failed promise by a promising electric vehicle startup as they delay their US-based electric car factory. Jeff Lutz is joining us, and he's a multi-decade supply chain executive and chief quality officer. He's currently he's the CEO of his own supply chain consulting firm. Thanks so much, Jeff.
Yeah, Herbert, this is some interesting news out there. We should definitely go through it.
So this one I think is fun. Let's get started with this. Was people think that who's the leader in Robotaxi? Who's the leader in, don't you know that all these companies like Cruise and Waymo and in China, there's many companies doing Robotaxi there. The one that's the big leader is Baidu. They have a service called Apollo Go. Well, this came out, this leaked a little bit. And Ray for Tesla always has access to these things that are going on social media in China. Watch this Apollo Go driver manually steer the Robotaxi while others are supervising their vehicles. Just curious if Waymo has a similar setup. So what we're watching here, it sure looks like that there are people that are in a room teleoperating vehicles that are out there, that people think are, they call a Baidu, Apollo Go, it comes to them, there's no one in the driver's seat, and they wonder, wow, this car is self-driving. But look at that. This is a big room with lots of people. Now, having said this, I do need to clarify that this is normal, right? Every car company needs to do this who's trying to do full self-driving. So first, 70% of Baidu's cars actually come with a safety driver. There's actually a person there. So even if you ordered it, there's somebody driving you, just like an Uber. And then they're trying to reduce that. And then there is a rule and a law in China that says you do need to have, teleoperators to save the car if in case something happens. Until you get to a certain milestone or criteria, then you can stop using that. So this is nothing, it's not new. In fact, I still think that Tesla will do this. A lot of people have told me they do not expect Tesla to do this at all. And I say, why not, right? So if there's an edge case, have somebody just bail that car out if they needed to. What's your thoughts on that video?
Yeah, Tesla won't do that. They may do it at they may do it at very small volumes, Herbert, to give you a little bit of credit, but Tesla is building a system for scale for millions of drivers, and you can't. I thought this was an arcade in China, like a really nice upscale arcade in China. I didn't realize that this was, AlphaGo and Baidu, moving their vehicles around, through China. So, yeah, it does make sense, I think, in terms of the regulation to have the ability to, have the car be recovered. But I think what Tesla is doing is they're working on a level of performance where that will not be needed. Like you don't have to design that in at scale, because at scale, and Tesla's thinking tens of millions of vehicles, they're building a system that you could drop the car anywhere in the world and it will work. And when you're thinking in that kind of scale, you wouldn't design a system that has humans in it when you're trying to, design a driverless system. So I do agree that it can be a step along the way, but this is not what Tesla will look like at scale. Baidu's not at scale. I think you're correct to call that out. And I think this is also important because there are lots of people commenting on, there's other people doing robotaxis. And I think what this calls out is that just everybody's kind of at a different level of maturity. And just because Tesla's not putting in, I would say, in robotaxi terms, an unfinished robotaxi network out there, because I think they could do a human supervised robotaxi network even now. People look at it, other people are ahead. Look, they have a robotaxi network. you have to look at the ability for the system to scale, both from a volume perspective and at unit economics, meaning can they have gross margins, that will make this a very good business in the future? Or are they just kind of like, are we seeing the output of some lab experiment, some prototype lab experiment where they're participating and they're getting funding dollars and they're exciting the investor base of like, hey, we're going to be a company that's in, this is the future of driving and we're there. But they're not really, if you pull the curtains up or you pull the rug up, it's not something that's going to work at scale economically or from a volume perspective. And that's a drum I'll continue to beat with Tesla, that they're working along both of those vectors for volume scale to get the most amount of cars out that have autonomy capability, and at a price point that consumers can absorb it, and then choose to not use conventionally driven vehicles anymore and actually move more miles away from people driving their own cars to these robotaxi networks. And I believe that's the system that Tesla is working on. And these systems that we see popping up along the way are not. And what will happen is at some point, their board and their management team are going to look at the burn rate of what they're doing. They're going to look at over their shoulder and they're going to see the performance of the Tesla system. They're going to ask Tesla what the cost is to take a license. They're going to look at their burn rate. They're going to look at what they think they can sell it to their consumer base for and say, why would I continue to burn more R&D dollars when I can just take a license from Tesla? I can enable my vehicles. I get the lowest cost structure and I can still sell this for a decent profit. And that's where I believe the future is going. Can some other company besides Tesla come up with a low-cost, vision-based system? The answer is yes. But Tesla has built this formidable lead with data. They built it with engineering, and they built it with their system design that's going to put them ahead for a period of time. A long period of time, I should say.
Yeah, that was a fun little clip there. We don't know how big of a problem that is. We did learn that Cruise, when they were sued because they dragged that person in San Francisco and they had to stop operations, that they were doing interventions every 2 to 3 minutes. But okay, so you and I did a live stream yesterday. We covered some of this big news. I wanted to redo some of them because it's in context with the other stories that we're going to add in here. And you just talked about licensing. So I wanted to ask you if that's something you expect to happen in the next event. I have a slightly different opinion, that's why. So here we've got Warren Redlich posted this and said, what's really going on with the Tesla Robotaxi event on August 8th? Did Elon suggest a massive engineering change that left Tesla engineers speechless? Is the event delayed? He doesn't know if it is delayed. But yes, he thinks the reason. He was actually correct because Elon replied to him, said, yeah, I requested what I think is an important design change to the front, and extra time allows us to show off a few other things. This is why I know you said in the live stream yesterday, you thought that one of the things, maybe, I know you didn't say that it's going to happen, but that possibly they could announce a surprise, and one of them could be a licensing. For me, when I see this as a show off a few other things, to me that means it's kind of a demo, like something fun, like maybe more of a Grok demo, maybe an Optimus demo. But yeah, what's your thoughts about him clarifying that the reason why they moved it is because of this important design change and a few more demos?
I think you have to take it at face value. And to me, it puts the changes in the context of like he's making a hardware change to the vehicle that may cause a couple of months delay to showing the vehicle. This doesn't change, a 5-year model it doesn't meaningfully change anything. And if you're looking 2 years from now or a year from now or 5 years from now, we won't remember that there was an August to, October change. What's really important is the content of the event and what it means to Tesla, what it means to the rest of the world in terms of how we're going to drive or be driven in these vehicles. And so I just think when we look back later in time, this won't be meaningful given the amount of revenue generation and margin generation that a high scale, high volume robotaxi network can create. And then what I was talking about with the licensing deal, I don't think they're delaying the robotaxi event for a licensing deal. I'm just saying every month that goes by And as the functionality builds up in the Tesla system and the performance of it builds up, I believe they're getting closer and closer to actually making a deal. And maybe that will coincide with the event. Maybe it won't. Maybe they'll want to announce it separately anyway to not steal any thunder from the event. But I just think we're getting closer and closer to that happening.
And do you know who I think it could be? that company we just showed at the beginning of the show, Baidu, Apollo Go. Because their general manager of their Robotaxi division actually was interviewed, and he said on Chinese news he'd be very open to partnering with Tesla. Why would they do that if they have their own? The system is going really well. So, okay, that's a couple more things that Elon said yesterday that we have already reported on, but let's go ahead and cover it quickly here. Chuck Cook said, I'm back from my trip. I have an update for all of you. There's these Tesla ADAS operators that are out there driving on my first day back. He's starting to see these cars out there. He goes, maybe this is validation of a new version, 12.4.5. Actually, Elon replied saying, no, that's 12.5. He's already doing that. And at the same time, a few days ago, he confirmed that it takes longer for them to be able to find interventions and therefore longer to do updates. Omar said this, we haven't even gotten started with Tesla yet. I've realized. Even bulls don't believe that Tesla has solved autonomy yet, but it is becoming pretty clear that it's a done deal. When your car can routinely handle 90 minutes in traffic with zero interventions, you see it happening. Elon told him that the amount of testing time it takes to figure out if the new AI is better than the existing AI is measured by miles between interventions. That's the limiting factor on progress. Because the longer, if there's less interventions by mile, it takes you longer to find those interventions. And yet they're also rolling out 12.5 now. And he has confirmed in the past that they can see versions ahead. And that's why I think he's referring to there, maybe 12.6 or 12.7. It's taking longer to find those interventions. What do you think about those two important news?
When you're doing product development, one of the things that you need to enable is acceleration. And when you have a product schedule, you have time, you have some constraints with schedule, and you have constraints with maybe volume of units that you can run your testing on to elicit defects. I'm speaking in very generic terms, but I'll apply it back to Tesla. I think what may happen, I think what you may see from Tesla in the near future is another 30-day free trial of FSD, where they turn it on, and anybody that owns a Tesla in a country where FSD has been approved for testing, like in the US and Canada, I think they'll have the ability to download it. And what does that mean? What Elon is saying is that Tesla needs more interventions to be able to improve the performance of the system, and then get them in the next training model and get those problems eradicated. What's the best way to get more interventions? Well, if Tesla had some sort of a simulator that they can accelerate, it would be great. But I think it's just going to be more vehicles driving more miles. So what's limited Tesla before is the FSD software, like on V11 and even early V12, wasn't a great experience. And therefore, you had people would just turn it off. And I would say greater than 70% of my drives on V11 were manual, and the rest were using FSD. But now I flipped that the other way with version 12, and it's definitely the latest releases. And so now you've got better releases that have people taking more of their actual drives, the more minutes of their, if they drive 100 minutes, whatever period of time, instead of it, now it's closer to 100 minutes of using FSD. So you have more people using FSD. What they actually need is they need to get it on more vehicles again. So I could see them actually doing a free trial to kick that number up very high again. And what will happen is you'll have this residual effect of like, well, people will see this on like 12.5, like, wow, this thing is really good. I'm not canceling. After the free trial, I'm going to keep it going, and they'll keep taking that number up. So I think you're going to see a number of these situations of free trial, get more eyeballs on it, which gives Tesla more training data, which gives them more interventions, which allows them to create a better model, improve it. And you have this flywheel turning. And I think this is what's going to allow Tesla to have this escape velocity and get to full autonomy. So watch for another free FSD trial so they can get more miles.
Okay, Cathie Wood was interviewed recently before Elon confirmed why they actually delayed the Robotaxi event. And Cathie Wood correctly was expecting that the Robotaxi delay was actually a positive sign. Let's watch the show here.
You have a 16% based on what Rebecca said. 16% of the flagship ARC innovation is Tesla. I mean, are you looking to increase that weighting? Is there a maximum cap within the strategy for a single stock?
Now, normally, we will start taking profits well before 16%. But the reason we have let Tesla run, we've taken some profits, but let it run to a higher percentage than normal of the portfolio, is because that Tesla is about to give us a lot more information about the Robotaxi opportunity. Now, originally, August 8th, so 8/8, and I know in China that's a very lucky number. And we thought that that's why Elon chose the date. At first it was August 8th. Today they pushed it to October. And that just tells me that we're probably getting closer to this taxi opportunity, not further away. He wants to show us something more, I think, awe-inspiring than we might have seen on August 8th. And he believes it's possible by October.
So she seemed to have called it correctly even before Elon confirmed that that's the reason why they delayed it, was he wants additional features in the front. But they're bullish, and they've always been bullish, but now they're actually letting their stock rise.
Putting their money where their mouth is. Yeah, they're putting their money where their mouth is. And I think people often wonder, why is ARK selling? What's happening? Well, they're pretty good about buying these dips up, adding a Tesla and letting it float up. And then they've got to keep their 10% target weighting. So they have to trim some, otherwise Tesla gets too big. But what she's saying here is they're allowing it to get bigger, significantly bigger than their normal holding, because they see escape velocity coming with Robotaxi, and they're pretty bullish. So it'll be interesting to see how it plays out. But ARK is pretty close to Tesla, and I think Elon has been openly appreciative and endorsing the work that they do on Robotaxi, and kind of fits where he sees it going as well. So there's definitely some synergy between the two. So I think it's, while ARK and Cathie Wood get a lot of grief for some of the other holdings that they have maybe in their funds, I think if you look at what they've done with Tesla, they've been pretty spot on with it. Even this, going back to the call, I think from 2018 or 2019, when Cathie came on CNBC and called for, I think a $4,000 price target and in 4 years, and Tesla did it in 3 years, and by 2021 pre-split. So they've been pretty spot on with this one.
Jeff, what do you think about in the last meeting and shareholder meeting, Elon actually said 3 times, I think that Cathie Wood's ARK Invest forecast for Robotaxi is the right one. The confidence he has on their analysis. What's your thoughts on that?
Yeah, I think this is something he's publicly called out, and so you can look at the work that they do. There's publicly available work that ARK does, and there's stuff I'm sure you can purchase, or if you're a fund, or if you're a client of one of the funds, I'm sure you get it. And what he's saying is that they're doing the right homework on this, and it takes a special class of analysts. You're not going to get every kind of Joe Schmo auto analyst to analyze Tesla the way that ARK is doing it. And ARK isn't, by the way, counting cars every quarter. They're not looking at that kind of stuff. They're looking at these broader brushstrokes around AI, Robotaxi, and eventually humanoid. And they're not even looking too closely at energy. So all these analysts to kind of take a different approach. ARK is definitely focused on AI and Robotaxi is their primary thing. So when they talk Robotaxi, it looks like Elon's definitely endorsing the work. Doesn't mean it's going to happen. It just means that he agrees with the work that they're doing.
And we are seeing more institutional firms investing in Tesla, and maybe they're saying, take a look at what they're doing, because you need to learn. So we're hearing more. Let's listen to Deepwater. And again, this is before Deepwater's Doug Clinton said this before Elon confirmed that the delay is true, He did not say what day it is. So I thought this was a great comment by Deepwater's Doug Clinton. And he said, nothing is official in Tesla land until you hear from Elon himself. That's great. That's great discipline, because everybody else just jumped from this Bloomberg report, has reportedly been delayed by 2 months. Let's listen to what he said.
Tesla stock has been on a tear. Its 11 consecutive winning sessions helped the EV maker regain all of its lost ground so far this year until today. Tesla's Robotaxi event, one of the drivers behind that stock's recent run-up, has reportedly now been delayed by 2 months, sinking the stock back into negative territory for the year. Joining me now is Doug Clinton, Deepwater Asset Management Managing Partner. Doug, it is great to have you on the show. So let's dive right into this headline, Doug. So reportedly, maybe Elon Musk thinking of delaying this Robotaxi event, Doug, to October. In your opinion, you know this company so well. Big deal? No deal? How do you see it, Doug?
Well, Josh, the first thing I would say is nothing is official in Tesla land until you hear it from Elon himself, because what sort of led to this event in the first place was a Reuters report several months ago that the Model 2 was going to be canceled. Elon said that that is false, and then he followed up saying that we're going to have a Robotaxi event in August. We haven't seen Elon tweet anything yet. I just checked before we jumped on air here. He hasn't said anything about the event yet, so who knows what could happen. But let's say that the event is delayed, in fact, to October. In my view, what the stock has been doing more recently is it's been reflecting the hype and the excitement that investors are having for Tesla and what might come in terms of this Robotaxi and what that ultimately might mean for the model. And Tesla, more than any other stock, is such a powerful religion. And I think that investors, as they see these new products coming, not just the Robotaxi in October, but probably a few new vehicles as well, I think people are starting to figure out what could this mean to our models. And they were sort of front running potentially some changes in terms of how analysts and investors think about that business.
And Doug, when you talk about Robotaxis, though, I mean, it's such a long-term goal in some sense, Doug. I mean, wouldn't it be a very long time before you would see any, real meaningful financial impact from that?
I do think that's probably realistic. And it's funny, I mean, going into the event, actually, given Tesla's track record, but also just what they do. I mean, they solve really hard physical, real-world problems. And they're maybe one of the best companies in the world at it, but often their timelines are a little bit optimistic. They often miss their timelines. It's just a normal thing with Tesla. Going into this event, I sort of assumed whatever date they put on their launch of the Robotaxi, you might want to add 6 to 12 months to. And then if you think beyond that, to the point of your question, Josh, when does it actually start impacting the model? Tesla has a really large business already in terms of selling cars. They obviously have several 100,000 FSD subscribers as well. And so the Robotaxi business would have to get to a pretty decent scale to really start having some impact, meaningful impact on the model. So I think we could still be in a situation where even if the Robotaxi launches, let's say late next year or early in 26, the real impact to the model might still be a few years beyond that. Even investors will start to discount some of that into the model, but we will have to be patient before seeing real numbers in it.
That's fair, right? So I like this guy. He's pretty fair. Said the right things. And then we're going to go and take a look at other institutionalists. But what's your thoughts on what you heard there?
I agree with some of it. I don't agree the stock is so much a religion. I think the run up in the stock, everybody has opinions, right? There's a saying for that. But you can't discount what's actually been put in the rear view mirror for Tesla. What's been put in the rear view mirror for Tesla is that the shareholder base and the vote for Elon's compensation package, the move to Texas, what this changes. Remember, we were talking, Herbert, yesterday just about what a Trump presidency could mean for regulation. Well, what Tesla moving to Texas, what could mean for how it's regulated and its freedom and what it can do with its stock and how it can ensure that Elon is compensated. That's a big thing to put in the rear view mirror. And I think that was an overhang on the stock for many months. And then, of course, Tesla put out their delivery numbers. And I know it's tactical, but it were higher than expected. And it's showing that some momentum is returning there. So you have these elements working together where we may have been in full compression on the stock already, and it may have been overdone. And I think that's been part of the run-up. Of course, this Robotaxi event is another thing that people are looking forward to. And I think it's part of it as well. But I think the it was overdone, with the rumor coming out of it being, delayed some period of time, which Elon has now confirmed it will be. I think that sell-off was actually overdone as well, but it's actually good for the stock to kind of go back, trace back. It went up very quickly, go back, knock out a bunch of the selling, pressure, get that out of the way. And if you've looked, it's recovered quite nicely. So I don't think it's a religion thing. I think that there were real catalysts and there were real detractors from the stock that are now in the rearview mirror. And now you're basically every month you're getting closer to FSD being driverless. Every month you're getting closer to the Robotaxi of unveiling. And every month you're getting closer to a network, being on the ground. So now we're in the middle part of 2024. I always tell people, think about, if you're an investor or if you're following the company and you're a fan of the company, just think in a 12-month block of where the company will be 12 months from now. And it's pretty exciting where we'll be this time next year.
Here's another institutional analyst that doesn't seem to get it. So Citi has increased the Tesla price target by 50%. So it sounds like, oh my God, they're getting it, 182 to 274. But why did they do that?
Because the stock actually got there.
It's so close. But they're neutral rating. Okay. And if you listen to what they said, it's has been more constructive on near-term investor sentiment on Tesla, but says a strong stock run-up adds greater reliance on looming electric vehicle product and artificial intelligence catalysts. The Q2 delivery beat was also encouraging, which prompts increased estimates and supports Citi's underlying call for improving EV sentiment this summer. Again, it's like, oh, we see a number move, we better change our. However, the firm believes core EV fundamentals alone are unlikely to support significantly further upside from here in Tesla shares, absent new products and AI catalysts. So basically, they're just all about EVs. What's your thoughts about that one?
Yeah, I remember, with these price targets and analysts, what you're kind of looking for is like a large percentage of them. In what direction are they moving into? Are they moving into being overweight? Are they moving into a buy call versus a sell call? And with Tesla, it's had this this history where most of the analysts are wrong most of the time, and a few analysts are right most of the time. And I remember people were just laughing 4 to 6 months ago at Adam Jonas, like, why is he keeping his like $310 price target, even though earnings have deteriorated so much? And he is an analyst that looks at many facets of the business. He was looking at the energy growth, autonomy, even Dojo, all these different things. He's like, hey, there is intrinsic value here well beyond the auto business. Then you have this swath of banks that are just covering it from an auto perspective and looking at this quarter versus next quarter. And there's very few analysts that get it right and look at the whole thing. So it's embarrassing. These analysts that have had, $100 some 100xx price targets, and they're just moving it up because the stock actually closed at that level a day or two ago. It's embarrassing. There's very little credibility. The ability for these analysts to actually call what the value of the stock is going to be within 6 or 12 months is proven to be quite inaccurate, and that's why I recommend people focus on the business and focus on the milestones and schedule and the health of the business. And are they doing things that you think are meaningful in the marketplace, and not trying to guess where you think the stock is going to be one day or another? I know the options people will all be up in arms and say, well, of course you've got to be able to guess where the stock is going to close this Friday. But I would just tell you, kind of long term, it's better to kind of just look at the business and where you see the business going. And are they doing things that are meaningful for the world and will be profitable in the way they're approaching it, relative to then just trying to guess, which catalysts, or just look at, it's definitely don't read these analysts blindly. In fact, a lot of them don't have the background to analyze what they're talking about.
And if you're looking at the EV market, or that's what matters to you, just like this analyst, there's two stories. There's Tesla, seems to be doing much better than everyone else, and there's others that are struggling. So here's our story on VinFast. They're a Vietnamese company. They're delaying their U.S. plant to 2028 amid market slowdown. This is what the cars look like. They look great, and many experts have told me that VinFast is good. they're really exciting what they do. Sorry, my visuals are terrible. So they delayed it. It's a $4 billion North Carolina factory. It's been delayed to 2028 now. They cut their delivery forecast this year by 20,000 units to 80,000. So that's like a 20% haircut. Sales did rise 24% in Q2. So they've sold 12,000 vehicles. The first half of 23 and 24, sales are up 92% year over year to 21,000. So obviously it sounds big, but it's really still in the small 20,000 units. Company cites economic headwinds and global EV market uncertainties, expect strong sales growth in second half of 2024 with new markets in Asia. So they're focusing on capital allocation. They got to be careful with their spend. They plan to announce Q2 results on August 15th. So it's a Vietnamese electric vehicle company founded in 2017. They aim to expand globally with a $4 billion factory. Now it's been postponed. Same thing that we just said about. It's going to expand, impact their market expansion. And then this is what an expert said. While the second quarter delivery results were encouraging, ongoing economic headwinds and uncertainties in different macro economies and the global EV landscape necessitate a more prudent outlook for the rest of the year. That's what VinFast said. So, okay, that's nothing. No other additional information there. What's your thoughts on VinFast?
I think a lot of these companies and announcements that you're seeing recently, Herbert, are companies that are betting on the election and kind of the direction of the country in one way or another. So you had Ford delaying investment, you had GM delaying investment, you've got models being delayed, you've got VinFast delaying investment, you've got a whole host of other, Volkswagen, a bunch of other companies have announced delays. And what you saw is the reverse of this in 2020 and 2021 when they saw that, hey, there's this not Green New Deal, but this investment platform that the next administration, in case the Biden administration, along with a Democratic Congress, would pass this legislation. So then you saw all this momentum and all this money flooding into the EV, but they never really had the plan to build a profitable EV, even with the credits that they couldn't figure out how to be profitable. So the actual defect here is not, incentives or no incentives from the government. I think there is an overhang with that. And I think you have seen all these companies now delay or cease investment. But the other piece of it is you can't go into their office and see a whiteboard or go in and look at their engineering plans and say like, oh, you've got something, you can produce a $30,000 vehicle for $22,000 in COGS. They don't have that. They don't have that plan. Tesla has that plan. And that's why Tesla is going to be successful. I don't think that others, whether they are foreign trying to set up here or whether American companies trying to build here, I don't believe they understand how to do the unit economics at scale to build an EV that's profitable yet. Do I think it will happen eventually? Yes. By the way, a very small portion of the Chinese are actually profitable, and we don't know because they don't have, the same accounting rules, but and they are struggling to globalize as well, as you've seen with many of their announcements. Everybody thinks the Chinese can just plant their flag anywhere in the world and produce. What you realize is you really honestly need to have this mixture of automation. You have to have this mixture of the ability to localize supply chain and do it in a manner that you can scale unit economics as your business scales globally. And they don't have that recipe yet. Tesla has that recipe. Everywhere Tesla sets up an energy factory or a car factory or a supercharger factory, they are actually accretive to their business and adding to the bottom line. These others are yet. And if the government's incentives are going to dry up, these companies are going to basically put the brakes on. So by the way, if you're a consumer and this company was formed in 2017, like what brand equity does that have as an American? I'm going to go buy this car. Are they going to be here 2 years from now to warranty it? I don't know. The answer may be yes, but it certainly should put some risk in people's mind. Whereas Tesla's been, is a 15-year-old or more company, and and proven that not only they stand behind the product that they do, that they're here and they're a fixture in this country and others. So there's a lot to unpack here. But as the incentives dry up, these companies are realizing that they can't produce yet at scale. And Tesla, on the other hand, without the incentives, are working on a way to continue to build that scale with or without them.
Okay. Thank you very much, Jeff. Follow him on X and subscribe to him on X at the Jeff Lutz. We covered a lot. We talked about Apollo Go's Baidu. We talked about VinFast. We covered Cathie Wood and Deepwater and Citi. And no one better to do it than with you, Jeff. Thank you for your
You as well, Herbert.
comments. See you soon. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.